Welcome to Seattle Wala. I'm privileged to see Mr. Mukesh today to help us with the tax planning and tax preparation for the next year. It's an honor to meet you. Thank you. Today I have 13 questions for Mr. Mukesh Makker, and these are related to the helping you with the tax planning and tax preparation for the next years. These questions are selected based on the recent situations where we have gone through the pandemics. We have seen the housing market boom in Seattle, and also people have started doing the crypto tradings. So this question I hope helps you to basically be ready for the next season. So now let's just get started. So again, welcome Mr. Mukesh. So my first question is, these days we've seen that there are many online softwares are available for people to basically file their taxes online. They use TurboTax, they use HR Web. What's your suggestion to choose between having a CPA performing this kind of a tax preparation via people do it yourself approach?
Well, the clients have many options these times. A lot of online tax softwares are available, but you have to be a tax savvy user. Online platforms are basically meant for simple returns where you don't have many complications. When the complication comes or you're not tax savvy, this will not meet your requirements. You have to be with a CPA or a tax preparer to get to the maximum benefits. So they are useful, but there are limitations.
Understood. Sure.
So when you choose them very carefully. If you know all the rules, you're tax savvy, your simple returns, do it. If not, take the help of a tax preparer.
Thank you. So with this whole pandemic situation, we have started seeing a trend where people have started working from home. And as we understand, in order to work from home, they have to buy equipments, furnitures, monitors, and so items, right? Are there any deductibles they can take an advantage to basically for all of these expenses?
If they are W-2 employees on salary, they cannot take any deduction. If they are 1099s, we call it Schedule C or single member LLCs, they can take all the necessary business expenses as home office expenses.
Yep.
They can write off this monitors, equipment, home office deductions, and all business related expenses. So the distinction lies between whether they are W-2 or they are B2B on 1099.
Okay, because here most of the people who are working for the tech companies, they basically are W-2 employee. So is it correct that larger population will get an advantage out of this?
So the IRS specifically banned the home office deductions for W-2 employees. So they are permitted. A lot of people have options. They do convert their W-2 into 1099 and then they take all the deductions.
Understood.
For W-2, the limitations are there in the last few years. Those things are gone. They cannot take the home office.
So in last 2 years, we have seen Seattle basically had a really good housing boom. And many of the tech employees who basically receives the stocks either through ESPP or through their stock options or the RSU plan, what we have seen is people, in order to buy the homes, they start basically selling their existing stocks. It is to buy the property for themselves or to basically invest into the investment property. What are the implications from a taxation perspective when they basically sell their own stocks?
Well, most of the stock sales are taxable, either as a capital gain or as a income on W-2. So whenever they sell it, it's a taxable event. And when they invest into investment properties or other things, those have their own passive activity rules, A lot of those losses may not be permissible, so they have to watch out very carefully. On one side they are triggering the capital gains, and other side whatever they're investing they may not be yielding the kind of active losses. And second option most of people use these days, instead of selling the stocks they can take a limit against the portfolio. They can borrow the money at a very nominal rate and invest the money into properties. That's a very lucrative area where you don't sell the stocks, you don't pay any capital gains, but you're able to invest the money into the real estate that you want to do it. So everybody has to weigh their own ways, their own individual tax situation.
And sometimes when the people basically sell the stock in a quantity, they basically generate the capital gain tax. What's the, can you elaborate more about the advance tax in this situation?
Well, the max tax rate as of today for the long-term capital gain is 20%. And if they incur the taxes in that way, they become subject to estimated tax liability. They need to pay advance tax, they call it estimated taxes, and they become liable to pay it 4 times a year, depending on what time of the year they sell it. But these estimated taxes are due in April, June, September and January. So it all depends on each individual case what their liabilities are.
So every individual basically recommended to identify their own liability and pay the advance tax on this quarterly limit.
Correct. That will be safer.
Got it. Now with this whole pandemics, I have seen that some of the people have lost their jobs, and the government did a great job that they basically provided this unemployment benefits. They issued checks also as part of the unemployment benefit. Do they need to pay the taxes on the unemployment checks they have received?
So it again depends on the income level, or the AGI is called adjusted gross income. Up to a certain threshold these are exempt, but above that they become taxable. Again, it's an individual specific case. So they need to watch out their own levels.
Got it. Thank you. Similarly, like I have a few friends who are basically a small business entrepreneur doing a business in Seattle. They also carried some sort of a loss. Is it possible for them to basically claim the pandemic's loan on the return?
Well, pandemics, they practically help with 2 or 3 types of loan. Mostly it's called PPP loans, payroll protection plan. They have 2 draws, the first draw and second draw. And the second loan came from SPA called EIDL, Economic Disaster Loans. Economic disaster loans are loans, they are repayable. It has no impact on the income, they are not taxable. They're just like loans, no impact on their tax return. The PPP loans, if they qualify, they are not taxable either. So the money they are getting it, they are using it for the expenses, they don't pay any tax, that money is all forgiven. So in all the cases, all the 3 loans are not taxable, so the clients don't have to pay any taxes on them.
That's great to hear. Now another question is, as we live in the east side, and what we have seen is often both the parents are basically working in a tech companies, or they both are basically working parents, and they basically have their kids go to some sort of a daycare or the childcare facility when the kids are toddler or the young age. Is there a benefit, or is there a basically can they basically apply the childcare as a tax deductible into their income tax return?
They do get deduction, but it's very minimal. Most of the people I see in this east side area with the high incomes, the max they get is about $600 per child per year. So deduction is allowed, but it's a very minimal at the high income level. Most of the people I see on the east side, they don't make much benefit out of this. But IRS does allow deduction on this front.
Got it. Okay. In this last few years of time, I have seen that the crypto market has boomed a lot. The Bitcoin, which used to be $3,000, now it moved to $60,000. And people have started trading cryptocurrency as like stock currency as well. Do you have any advice on the people who are doing who are basically doing this trading, and what will be the implication on their filing the tax in the next year?
So IRS is tracking down on the Bitcoin and cryptocurrency very seriously. The earlier years it was very lenient, the rules were not clear, people were not declaring it at all. Now they are ensuring it that everybody has to declare it, and the gains or losses on cryptocurrencies are treated like stock losses. There's no difference. They are reportable on Schedule D and they have to pay the same capital gain tax.
Now, in the pandemics, many people have generously donated the money to the charitable organization within the US, and some of the people have basically even transferred their money back in the India or their own home country. What are the basically options available for them to basically get the tax deduction?
So, donations or charitable contribution in USA, they are fully deductible up to 50% of their AGI limitations, and only thing it has to be that it needs to go to a IRS approved charitable organization. You cannot donate to mom and pop and claim deduction. It has to go to a IRS approved 513C organization. They are fully deductible. Whether you give them in by check or in kind, both are fully deductible. The contributions outside the country are scrutinized, and they have to be to most of the recognized institutes on those countries. People like companies like Red Cross or other international companies, they are qualified, but if you are sending the money into a small control group overseas, that can create problems in getting the deductions. I've seen some rich or affluent people here running their own private foundations, or they can also do the contribution through donor funds through Fidelity or Vanguard, where you contribute a large sum of money to those funds and take a tax write-off in 1 year, but you can keep on using that money over a number of years from those funds. Those are becoming very popular these days, where you want to take it high deduction 1 year, but you want to distribute the money to charity over a number of years. So private foundations or donor funds, those are very popular.
So due to the low interest rate, I have heard that many people have taken advantage and they have refinanced their mortgage. Are there any component in the mortgage statement where they basically can take advantage to reduce their tax liability?
So if they pay kind of a points on the loans or refinance, those points are tax write-off over the life of the loan. Plus if they have unamortized loans from the previous loans, when they refinance, they can take up all that money in the year of refinance. So yes, they do get the benefit of the points or the loan fees they pay on the refinance.
Thank you. This is the question for the people who have recently migrated from other countries into US and they are on a H1B Visa or L1 visa, where they have some sort of a responsibility of paying the tax back in the India. At the same time, they also have to file the tax in states. So any suggestion how they should be doing it? Is it mandatory for them to file the taxes in India at the same time?
Well, if they live in the country more than 183 days, they become to US tax laws. If they're H1B Visa holders, they become US resident and they file 1040 over here. If they have an income originating from India, they are liable to pay taxes on those income as an Indian person, and there's no double tax. Whatever taxes they pay overseas, they get a foreign tax credit here, but the global income is taxed in US. Anybody, any US resident or any US citizen, the global income is taxed over here. But there's no double taxation with a foreign tax credit with the treaty countries. India is one of them, Canada is one of them, so they do get the benefits there.
Now, let me think about this worst kind of a situation, right? So often people basically file the income tax with the IRS, but eventually they basically, or some of them basically receive the audit notice. What happens when the person gets audited, and how do people can prevent such situation?
So audit is a common situation when you have some red flag in your returns. It can be any number of points, the mistake you did, or you're like an odd man in your tax returns. So IRS sends you a notice. First the notice come by letter. They ask for information, they ask for additional information to be provided, and most of the clients I see, they take up the job themselves. They think it's very simple and they can respond. They take up the job themselves without consulting any consultant, and they respond or provide the information, and when it lands up in more trouble, then they approach the consultants, and by that time it's too late. So in the case of audit, there's nothing to panic. They may be trying to get some missing information, some clarification, some kind of a things. So if you know the tax rules, yes, handle it. If not, approach the tax consultant. Most of the time these cases are easily resolved without any additional headache. But if you delay the things, respond yourself with incorrect information, that complicates the matter.
And when you think about the complicates or the penalty, what type of penalty they have to go through it, and what type of experience they have to go through it?
Well, if they do not respond properly, the things get delayed. IRS only takes about 6 to 8 weeks or more than that to respond. If there's a simple thing and you owe the money and you keep on arguing with the IRS, your late penalties keep on accruing it. From the day you are liable to pay the money, you keep on accruing the penalties and the interest. And it's not easy to get response from IRS in general, and particularly in the pandemic, the response time is very poor, very poor. So if you get a response after 8 weeks, 10 weeks, maybe that time, your interest and penalties keeps on accruing it. By going to a CPA or a tax consultant, they can figure it out. It's a correct claim. If IRS is correct or you are correct, they can make an immediate determination and pay the money if required to minimize your penalties and interest. So that kind of a situation, you can always get a help from a consultant.
Thank you. Now, this is a most typical question you must have heard before as well. Is there anything a normal person like me can do to reduce my tax bill? And I understand this situation basically varies from a person to person and the stages to stages. But is there any simple few tips which you can share with the audience so they basically are prepared for the next year?
So for salaried scenario, W2 income, retirement contributions like 401k if you are working for a company, or 401(3)(b) if you are working for a charitable organization or a non-profit organization, contribution to charity and some other foundation. If you have a large income, you want to shelter the income under charity, private foundations are a very good source of putting a large money in 1 year and helping the charity over a number of years. These are the specific 3 areas for W2 employees. For business, other things, there are a lot of avenues open, including the pension plan or DBP plans or 401ks or SEP plans, heavy vehicle use. There are a lot of opportunities, but each one is case specific. You need to know what your scenario is. If the husband has a job, the wife has a business, or vice versa. So, but these are the open avenues where we can minimize the liabilities legally by use of vehicles, retirement planning tools, and buying of equipment, leasing opportunities. So a lot of areas that can be used of to minimize the liabilities.
So my last question, now we all are basically very happy to see that this is your almost 30th year serving as CPA in Bellevue, and your overall experience is more than 40 years as a chartered accountant as a CPA. So what's your advice to the Indian youth who wants to pursue the CPA career in the States?
Well, it's a very interesting and very challenging area. You can grow a lot and you can learn and serve the community a lot. Needs a lot of experience, but it's a upcoming field. May not be as lucrative as IT, but still it's a very lucrative field in the accounting and finance area and taxation area. There are a lot of opportunities in private practice or corporate sector. There's a huge demand, and people should come forward and do it. And as a note that our company now offers a lot of advices besides this tax planning, including the area of estate planning. With the attorney on board in my office, we have a lot of opportunities there. And we can serve the community a lot with our estate planning services, with the wills, trust of the areas.
So this is going to be my real last question now. So often when people come to your office to file the income tax, what are the challenges and the mistakes do you see when you basically help them file their taxes?
Majority of the time people come too late. See, as a CPA, our office gets very busy towards the last deadlines and we stop taking new customers around 3 weeks or 4 weeks prior to the deadline to serve our existing customers. Late information, incomplete information, those are the major operational areas. In the meantime, they miss the deadlines for estimated payments, that triggers more penalties. They are not able to get the documents to the last date, which has no extension. So these are most of the areas where people miss the items or they don't call us in time to take timely advice. If they call us in time, the timely advice can save them a lot of taxes by timely contribution to retirement or other purchases, which can minimize their liabilities. So people should plan ahead of time. We normally send out all the organizer to the people. If they act in time, they can save a lot of the operational hassles. So thank you Setterwala for all the work you're doing for the Indian community. By putting all the experts and professions together, people can share their knowledge and make use of that. It's a wonderful service and I recommend and suggest to all the people to subscribe to the channel to make it a big success for our Indian community here. And thanks again Setterwala for all the contribution you're doing.
Okay, so thank you everyone. Thanks for joining Seattle Wala Show, and thank you again, Mr. Mukesh,
Thanks.
for helping the community with all the insight.
Thank you.